Hey everyone, George here. So today, what I want to go over are a set of tax strategies that will both save you a lot in taxes and make you more competitive as an employer. And they are, medical expenses and healthcare expenses that you can cover legally in a compliant way for both yourself, your family, and your employees. Stick around and let's get started. A lot of contractors don't have a big fancy HR department and a big fancy benefits team. But that doesn't mean you can't play the same tax saving game that larger companies do with respect to medical and health expenses. The IRS actually gives small businesses with under 50 employees a lot of flexibility and leeway with respect to medical and health expenses. You just have to set it up in the right way. And when you do it right, you can actually deduct medical expenses, avoid payroll taxes in relation to the medical expenses, and help your employees without killing your margins or having them taxed additionally. So let's go over 5 key moves that you should know about for 2025. Number 1, the classic, is the Section 105 health reimbursement arrangement. It allows business owners to deduct their own and their family's medical expenses, have it become fully deductible to the business and not income on their personal side. This would include premiums, prescriptions, doctor visits, and dental and vision. The only 2 main things are, number 1, you need a plan in place, and number 2, you need to make the reimbursements before the end of the year. That is before December 31, 2025. So don't sleep on this one. If you've been paying your medical expenses personally on the personal side, you are missing out on this deduction. You just need to set up the plan and make the reimbursements in the right way. Again, it's deductible to the business and it's not includable in income to you on the personal side. The second of these strategies is called the QSEHRA, and that stands for Qualified Small Employer Health Reimbursement Arrangement. So these are for small teams, maybe 5 to 20 employees, that kind of thing, where you want to offer some sort of coverage for their health insurance. However, you don't want to dive into the complexity and all that of an actual group health insurance plan. So the perks of a QSEHRA is you get a business deduction for every dollar you reimburse up to the cap. Your employees don't pay income or payroll tax on those reimbursements. And you don't have to buy group insurance or deal with a ton of paperwork and brokers and all that. For 2025, the limits are $6,350 for self-only coverage and $12,800 for family coverage. You just need to make sure you give written notice to your employees at least 90 days prior to January 1 of the year you want it to take effect. However, even if you missed that, it's only $50 per person penalty, so it's not the end of the world. There's also a good chance the IRS isn't coming after you for that. Strategy number 3 in this bucket is called an ICHRA, an Individual Coverage Health Reimbursement Arrangement. The nice thing about an ICHRA is that it can work for employers of pretty much any size. It's not capped at 50 employees the way a QSEHRA is. Also, the way it works is the employer would need to set employees by class. You could have just one class, or you could break it up into employees that are salary versus hourly, and by region, office versus field work, whatever, almost any class segmentation you want. And you can determine for each class what the reimbursement arrangement is going to be. And there's no dollar limit there the way there is for a QSEHRA. You're basically reimbursing your employees for individual marketplace plans or private plans or Medicare or whatever their deal is. You can even offer different plans by different classes, but everybody in the same class needs to be offered the same exact things. And again, the nice thing about this one is there's no actual limits or caps on how much you can reimburse. You just have to keep in line with your policy. Unlike the QSEHRA, which has limits by self-coverage or family coverage. You really just have to stick to the same coverage rules by employee class. Again, for this one, you need to give a 90-day written notice. And technically, this one, unlike the QSEHRA, is ERISA, meaning there are some compliance requirements that you need to check off every year with the IRS. So there is a little bit of complexity involved in this one. Unlike the QSEHRA, it is considered a group health plan. So there are some compliance things to check off, making sure this one is set up all right. But again, the nice thing is that employers of any size can get this implemented, and there's no actual limit to how much you can contribute. Again, similar to QSEHRA or a Section 105, it would give you the deduction for any reimbursement, and this would be void of payroll tax or income tax to your employees. So it is a very attractive benefit for sure. But I could do a whole episode one day on, just each one of these plans and exactly how to set it up to make sure all the boxes are checked. It's not gonna, we're not gonna be able to cover that for all plans in one episode alone. Strategy number 4 in this bucket, and more than actual strategy, this is a pitfall to avoid. It is the S Corp health insurance trap, and this you just have to make sure that any reimbursements for your health insurance, to yourself as S Corp owner, gets reported also on your W-2. It should appear in box 12, and the reason for this is because your tax preparer would for any 2% or greater shareholders, they would back out any health insurance reimbursements paid, and you don't want to go adding it on your Schedule A, because then it's going to be subject to the 7.5% of AGI limitation. So what you want to do is you want it to show up on your Schedule 1 as an adjustment to income for under CHI, which is the self-employment health insurance adjustment. So when you do that, you're not subject to the 7.5% of AGI limitation, which helps a lot, obviously. And finally, we get to strategy number 5, which is a small business health insurance tax credit that's available only in 2025 and 2026. So with this tax credit, you could qualify for up to 50% federal tax credit on the health insurance premiums that you pay to your crew. But there are a few qualifications. Number 1, you need to cover at least 50% of the cost of single coverage for your employees. Number 2, you must have fewer than 25 full-time equivalent employees. And number 3, the big one, their average wages must be under $25,000 a year. You can't claim it for yourself and your spouse, but you could claim it for your employees. So again, I know that was a lot we went over, but the 5 medical health insurance strategies that we covered are: number 1, a Section 105 health reimbursement arrangement; number 2, a QSEHRA; number 3, an ICHRA; number 4, an S Corp health insurance trap that you want to avoid; and number 5, the 50% federal tax credit for qualifying small business employers. So one way or another, you can try to make yourself more competitive as an employer, try to attract and retain better talent by implementing one of these. You get a straight tax deduction for it, make it tax-free to them. It really would go a long way. So I hope you found this helpful. I have everything summarized in the show notes, and again, I'll probably be making at some point in the future episodes on the individual medical health insurance strategies that I covered, specifically the Section 105, the ICHRA, QSEHRA, and how one would go about implementing those. So I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and hope to see you in the next one.